Your mic, are you?
Right. Can you hear me now?
Yes. Welcome,
Okay,
Virginia.
fantastic. Thank you.
Okay.
Thank you so much, Lucy. Thank you for this awesome opportunity. I'm impressed that on a Sunday afternoon when everyone wants to sleep early so that they can, catch up. I mean, they can be well and refreshed tomorrow morning. There are people here who are eager to learn and to live more, more fulfilling lives. I'm impressed mainly because this is not just a conversation about money, but I like the fact that you engage in other conversations such as parenting, which some of us, sort of is it struggle with, or we are never sure whether we are doing the right thing. And like you aptly put it, if you're not at peace at home, even your focus out there in your business and in your line of work is greatly inhibited. Thank you very much. And asante sana for this forum. I will certainly be joining in on other forums because I've also seen that I could learn quite a lot in other areas of your coaching. All right, great. Asante. I also took note of some of the expectations that have been raised, and I hope I will be able to address them. And if you feel like I have left out anything, please feel free to engage. I intend to make this as engaging as possible. So feel free to ask questions at the end. So allow me to jump right into my presentation. Just a minute.
You're able to.
Yeah, I'm sharing.
Okay.
Okay, can you see my slides?
Yes, they are clear.
Okay, okay, great. All right, so today, like Lucy indicated, I'll be talking about the money market fund. But that does not mean that that is, all that we have to offer at Britam. But like she said, we intend to make this a journey. We want to work together with you. And so I'd rather we serve this information in bite-sized pieces so that, we are able to internalize it and relate it well to our lives. So today my focus will be mainly on the money market fund and what it means, not just at Britam, but generally what is money market fund and what does it mean to you? I've taken note of a number of people who are saying, we are in circles. Patricia said she's in property. Someone else said they're keeping their money in a bank. You mentioned someone who's keeping their money in a piggy bank and it was stolen. So we'll discuss all those things and see how it all ties into our lives and towards, achieving our objectives. So before I do that, I think it's only in order for me to introduce who Britam is. I believe anytime you're committing your money anywhere, it is always important to know the risk profile or where you're investing your money. Is it, in Kenya, we say itakunywa maji. So it's always important to check the nature of person you're giving the money to, the institution. In fact, many times I've had people say that if you're lending money to a friend, just let it be money that you're willing to let go, because sometimes things happen. And so in terms of Britam, we are a firm that is listed on the stock exchange under Britam Group. So Britam Group is what we are mainly known as. And Britam Group, for many of you, may know us for our insurance services. So we are the biggest life insurance company provider in this country. And not just in this country, but we also have a presence in other African countries. So we're in Kenya, Uganda, Tanzania, we're in Rwanda, we're in South Sudan, we're in Malawi and Mozambique. And we take pride in this because, we have grown from Kenya. Normally what you have seen is companies coming from out there and coming into a market. So this is a locally grown company that has gone out there and is serving other markets. So normally we tell our clients, if you have invested in money markets in Kenya, you go to Tanzania and you need your money, you can walk to any Britam branch and they can assist you, sort of access your money, even if you have an emergency out there. So our life insurance company is the one that has been in existence for about 54 years now. But aside from that, we also have expertise in general insurance. We have medical insurance, which is very, very important. I think after COVID, and not even just before COVID, I'm sure we have seen, people who had amassed quite a lot of wealth, losing everything because of health, while perhaps if they had taken medical insurance costing maybe 50, 100,000 shillings, 200,000 shillings, every year, it may have gone a long, long way in preserving that wealth that they have made over the years. So that's a facet that you also do. We are also very, very keen on retirement planning. It's a fact that a lot of people retire miserably and a lot of people are stressed. Some people even die, in retirement because they hadn't planned for their retirement well. So that's also another area that we like to focus in. And then we have asset management, which is the division that I represent. Asset management, we manage investments for both institutions and individuals. And when people hear investments, they think it's big money, 10, 20, 100 million. But in our case, we have brought down investments even to our students, even to a mamamboga, even to a boda boda rider. Basically, investments are not out of reach for anyone, because with as little as 1,000 shillings, you can actually start building up your investments with us. And then finally, we have a property division, and that just owns, all the buildings you see around belonging to Britam. So those are some of our property investments. So in short, we pride ourselves in being a one-stop shop for a fully diversified financial services provider. The only thing we don't do is banking directly. We don't necessarily have banking halls, but we have invested heavily in the banking sector. We own about 10% stake in equity, and we own another about 48% stake in housing finance for strategic reasons. So bringing it down to Britam Asset Managers, the investment side, this is a company that was incorporated in 2004. And basically, like I said, our mandate is to provide quality fund management and investment advisory services. Yeah, so whether it's someone who is saving for a phone they want to buy in 3 months, whether it's someone who is saving for a holiday in December, whether it's someone who is saving to buy a plot of land, whether it's someone who is saving to, get into real estate, whether it's someone who's saving for their pension, we offer all those solutions. We are licensed by the Capital Markets Authority. It's very important to know that this is a fully regulated institution, because Lucy has mentioned about people who have gone into pyramid schemes. And we know the biggest problem with pyramid schemes is the fact that there is no recourse for the investor. So you put in your money, if something happens, that's it. There's no recourse. As much as some of us back in the days invested in DESI, and we tried to cry to the government, but up to date, we are still waiting. But it's simply because these are not regulated institutions. So we are regulated by the Capital Markets Authority. Our funds, especially this money market fund we are talking about today, operates under the structure of Capital Markets Authority. So even the structure of money market in this market is not determined by Britam, it is determined by the Capital Markets Authority. And they have certain guidelines that we have to operate in to ensure that your funds are fully protected. And in the event that if anything were to happen to Britam, all of you would actually come and be able to access your money from what we call a custodian, because by law, CMA requires us not to keep the money with ourselves, but to keep the monies with our custodian in case, due to our own internal inefficiencies, we are not able to continue with our business. Your monies are fully accessible from the custodian. In this case, our custodian happens to be Standard Chartered Bank. We're also regulated by Retirement Benefits Authority, also for management of pension schemes. As at today, we are managing well in excess of 240 billion in terms of investments. Now, these are not insurance funds. These are purely investments. Like I said, 1,000, 10,000, a million from someone else, 100 million from an institution, all that we are managing for them on a short-term or long-term basis. And we are at about 240 billion today. So we look forward to building the confidence in you to entrust us. I've had someone mention that they're already with Britam, and we really appreciate your support. So you can see where your money is, Asante. All right, so I'll jump straight into the gist of today to talk about, investments and personal finance, and where do we come in as Britam. Number one, we want to help you identify your goals, which could already be known, or sometimes you don't even know what your goals are. You just feel that, I have started working, I have started receiving my first salary. You know, when you receive your first salary, first month you you spend it to bring it down to manageable level. So you could be at that state where you don't know what to do. So far, what are your goals? Or you could have your goals that are very direct and very well noted down. So we help to identify those goals first of all. If you don't have any goals, we help you to sort of chart them and see how you can be able to achieve them progressively. Then once we have identified the goals, we work together to come up with a plan to address these goals. Okay, so I want to go to Mombasa in December. There are very many ways of achieving that. I could decide, as is classical Kenyan culture, you take your December salary, you don't pay your rent, and decide, you know what, I'll talk to the landlord in January. You go to Mombasa, and you had intended to spend 20,000 shillings, you end up spending 40,000, and January is a mess. And Mshwari comes into the market. That happened in 2019. Mshwari comes into the market. People have squandered their incomes in December. Mshwari comes, and within 1 month, they lend out 1 billion shillings. What does that say? That we are not planning ahead. So there are two ways. You could decide, well, I will work with what I have, save progressively. Number two, I could go and borrow to finance that. So Kenyans finance a lot of consumption, which is actually not a good idea, because I mean, why would I want to take a loan to buy a television that is not earning me income, or to, so there are other ways of doing it. You could choose to borrow, but then the challenge with borrowing is that you end up paying interest. So if you had opted to start saving in advance, you could have saved and interest, and that interest can stretch your objective a little more further. And then once we identify those goals and we come up with a plan to address them, then we implement the plan. And then finally, we help you track them periodically. And that's why Lucy is saying, maybe we'll come up with an incentive where we can help, give you merchandise here and there, or small tokens of appreciation, just to encourage you to carry on with your goal. So in partnership with Lucy, that's what we will be doing for you. So let's look at investments. I had the conversation that was running around, should I do business or should I keep my money in money markets? I'm in a circle. Is it better than money markets? If I'm doing treasury bills directly with the government, what are the advantages? What are the disadvantages? I'm in real estate because I had a savings account and I realized it was not working for me. So I decided to go to real estate. So the gist of this slide is basically to look at all these investments, or to look at all these platforms where we channel our money, and to see how they are relevant to our lives. And also perhaps that discussion of which one is better than the other. Is there an ultimate investment? I don't know what you think, but in my view, I don't think there is one ultimate investment. So in terms of where we invest, where most people invest in this country, we have number one, people who keep their money in banks. Traditionally, that's where most of us will keep our money, in a bank, because if you're employed, for example, your salary will come through a bank account. If you have a business, your suppliers will pay you through a bank account. So it goes without saying that most of us have bank accounts. Actually, about 30 million of the 45 million Kenyans have access to a bank account. And what's the advantage of a bank in our lives? The beauty of a bank is that if I need to transact today, if I go to the supermarket and I need to shop, if I need to receive my salary, then the bank is the best option. Should everything be kept in a bank? Well, maybe not, because we all know that if you keep money in a current account, it earns you nothing, unless you're a big corporate and you've negotiated for that. So if you keep money in a current account, you earn nothing. If anything, at the end of the month, there's a ledger fee that is deducted. Yeah. So if you keep all your money in a bank account, well, then you're doing yourself a bit of a disservice. So what we encourage is whatever you need to spend within a period of 2 weeks, up to a month, by all means, keep it in a bank account. So once you do your budget, like Lucy was saying, once you've tabulated your 50% needs and your 30% wants, you can keep the 50% for your needs in a bank account, because as you're paying for this, for your rent and for school fees, etc., it will be best if it is kept in a bank for ease of access. Then we have SACCOs. SACCOs are good. I'm a member of a SACCO too. And the reason I love SACCOs is, number one, because you get a multiple of your funds. So if today I have a project and have some savings in a SACCO, I can go to them and they'll lend me at a multiple. A bank will not do that. A bank will first of all vet me, look at my ability to repay, etc. A SACCO will still do that, but they will give me 3 times. So it is a very good way for people, especially who have projects in mind. It's a very, very good way of saving, because you can be able to access these days even up to 4 times. And SACCOs have become flexible because most of them are even now lending on collateral. It's not like back in the days where you had to have 5-10 guarantors. These days, even with if you want, for example, to build a house or to build an apartment, you can use that land and that project as security. So SACCOs are good. However, there are instances where a SACCO may not come through for you. For example, you have a medical emergency. You may not at that point go out to withdraw your shares because you have that emergency. The easiest way now at that point will be to get it through a loan. So you see, if you have an emergency and you want the money, but you have to borrow it at an additional cost, then it makes the burden even harder. So SACCOs are good for borrowing, but are they good for like emergency funds? Perhaps not. Then we have M-Pesa. There are people who keep their money in M-Pesa, SMEs especially. SMEs are fully on M-Pesa. Everything just operates on M-Pesa. I keep my money in my M-Pesa. If I go to Gikomba to buy my bills, I pay the person who is selling the bills in M-Pesa. My clients, my online clients pay me via M-Pesa, so the money is fully there. And it is for that reason that, if you look at Safaricom's turnover, it's huge. Last year they did a turnover 235 billion. You can imagine all that is our money sitting with them. So sometimes we end up keeping too much. So maybe if you start looking at your finances closely, you can realize there's money that perhaps you can be sweeping out to channel to maybe to a money market or to an account that can give you interest, or even channel some of it to a SACCO so that you can be able to borrow, as opposed to borrowing from a Shylock. I know a lot of business people will go to those short-term Shylocks for quick fixes, but if you channel some of that money from M-Pesa into a SACCO, perhaps now you're building a more sustainable base for your borrowing. Then we have treasury bills, government bonds. Now for the more, these ones are preferred mainly by institutional investors. Why? I think because they have access to information, and also what we'd call more seasoned, seasoned, or people basically who are more mature into their finance, into their wealth. So as they're looking for investments, most of them will say, okay, fine, I've made money in business. Now I want to pack it into a very safe and secure parking space. And that is why they will now buy bills and bonds, because they're like, what, I've made this money from business. I already have a surplus. I don't want to return it into business, and I'm nearing retirement. So can I start buying into government bonds so that when I retire, government bonds pay interest every 6 months. So we have clients who we have helped structure portfolios where we buy them bonds and we structure them in a way that there's a bond that pays interest every month. Yeah. So even as they retire from their businesses or they retire from employment, for example, retirees, they are sure that number one, their money is safe, because it cannot get any safer than the government. Yeah. Well, I know right now we have a lot of doubts in our government, but the truth is, it's very, very difficult for a government to default. And worst case, what they say is jokingly that even if the government got broke, the worst they could do is maybe print out money to pay us or borrow from IMF or wherever. But in terms of safety, it can never get any safer than government bonds. So a lot of people who are our seniors prefer that because of the safety. It may not give them very good returns compared to their businesses, but even a guaranteed 10, between 7 to 12% return every year, and it comes consistently every month is a good thing to retire into. And remember, your principal is still intact. So what are the advantages of government treasury bills and bonds? Like I said, safety. What would be the disincentive, especially for government bonds? It would be the duration, because Government bonds are long-term in nature. We have some bonds that are 5-year, 10-year, 15, 20, 25. We even have 30-year bonds. So technically what you're doing is if you go and buy a bond on your own, you're committing. For example, if you buy, last week we had a bond that closed, a 15-year bond that closed at about 12.25. It's giving a return of 12.25% per year, and it is tax-free. But now the thing is, it is a 15-year bond. So you technically have to hold it for 15 years if you have bought it on your own. Or if you want to exit, you have to look for someone who wants to buy. So it gets a bit tedious. And then we have real estate. Now, real estate, Patricia raised this question and said, she has decided to go into real estate. Real estate is good because number one, real estate gives us a capital appreciation. If I buy a plot of land or if I build an apartment on my plot of land, I know that this property will appreciate in value. Of course, the rates of property appreciation in value have come down drastically. It's not, we are now come down from times when we would realize even 100% in a year. You'd buy a plot of land and sell it at double the price at the end of the year. That's not the case anymore. But nonetheless, for someone who has a long-term view towards real estate, then of course it always comes with very handsome capital gains. Now, my question to most people usually is, how many of you actually sell your properties to unlock those capital gains? Very few people will ever unlock, and especially, for example, if your real estate maybe is the home where you live, it's very rare that you'll actually ever unlock that value. Otherwise, to most people, it remains as a paper value. Yeah. So real estate is good for capital appreciation. It is very good for people who want to draw rental income. But then again, if you're looking at rental income, now these days you have to be very particular. We know like the upmarket areas of Kileleshwa and Kilimani have come down significantly. In fact, people have made losses from investing in building houses in those areas. But there are other nodes, places like Thika Road, Riru, places like South B, for example, places like Raka, where people are still getting very, very good rental yields. But then again, you notice that it depends on where you're going, because in some areas, the rental yields have come down to as low as 3%. So sometimes I ask myself, as opposed to going to develop a property and build an apartment in an area where I will struggle to get tenancy and I may end up getting 3% rental yield. First of all, this project will have taken me 2 years to complete. I'll have to do approvals, etc. So 2 years, my money is actually lying idle as we are doing the project. And then when I complete the project, now from there, I start looking for tenants. And then it takes me another year to have it fully occupied. Or sometimes you have seen instances where some houses have been at 50% occupancy for maybe 2-3 years, sadly. So between me and someone else who went and bought, for example, if I'm a retiree, because we've seen a lot of retirees getting into real estate, and because they're not well advised, they go into areas that are not suitable for rental yields. So if I'm a retiree and someone else retired with me, we got our 20 million pension. I went and took my 20 million and invested in real estate. I'm still struggling with tenancy. Someone else on day one took the money and put it in a bond. And by the 6th month, they were already earning the first tranche of the 12%. And they better than me. And I don't have the headache of, the maintenance. People are moving out, etc. So real estate is good, but then you need to be very careful which areas you're investing in, which segment of real estate you're doing. We've seen people who invested in malls and are really, really struggling with them. So as Britam, we actually have a consultancy department that deals with real estate. So if you are looking to invest in real estate, come to us and we will sort of help you and navigate that path in terms of advising you on which are the good areas to invest in. I may have dwelt a lot on real estate because I know it's an area that we are all very passionate about, especially Kenyans. Everyone wants to own some piece of real estate. So it's a good thing, but then talk to an expert to guide you further on whether your direction is in the right, is headed in the right direction. And then we have starting my own business. So starting my own business, I think if there's Lucy, I need clarification on this one. Perhaps you can be my coach on this one. Because in this day and age, everyone wants to own a side hustle. Even people who are employed like me, everyone wants to have 5-10, okay, not 5-10, maybe 2-3 other income streams. So I would want to know, I don't know whether there's anyone who's done a research in terms of, is it better to work and run a business, a side hustle, or are you more efficient when you decide to leave that job and commit 100% of your time into the side hustle? I think I'd really appreciate information on that. Yeah, perhaps it's something that we can discuss. Yeah. Okay, so in terms of starting my own business, yes, we all want to start our own business, first of all, because we all know the nature of employment in this day and age has become very uncertain. I'm sure most of you have been seeing what's been happening in the newspapers and in the media. Britam is restructuring. So as we sit here, I'm not even sure whether I will still be at my job in another 1 month. Okay, on a light note. But anyway, yes, the corporate world is shifting. Last year, there's a research that showed over 1 million people lost their jobs in just 1 year alone in this country. So it has become imperative for us to have, multiple income streams, and that is where starting my own business is a good thing. So am I better off starting my business? How efficient will I be when I'm working and still running my business? I know a lot of people who've been conned along the way, telephone farmers who've invested a lot of money to plant tomatoes and onions. And then at the end of it all, it is, you end up losing your money. So should I start my business while I'm still working? If I'm starting my business, how do I get the capital to start my business? That's also another struggle. We've seen a lot of people borrow to start businesses, and then they really struggle. And sometimes within 6 months or a year of running that business, you are choked by the loans and you're not able to sustain that business anymore. So as I'm starting my own business, how do I get there? Do I borrow? Or do I save up slowly by slowly so that I have a base, I have a capital base? And that capital base that I'm saving up slowly by slowly, where do I start? Where do I keep that money? Yeah. Should I keep it in a bank? Should I keep it in a circle? Should I keep it in money market? etc, etc. And then, but now when you look at it in terms of business people, the truth is you'll always make more in business, but then the risk is also higher, because I know people who go to China, have very many clients who go to China, for example, before 2019, I have very big clients that would go to China, bring merchandise, and within 2 months, they have churned a 10 million container, doubled that, and then they head out to China again. 2 months later, they double up. So you realize that in a matter of, say, 1 year, they have churned their 10 million 4 times, every time doubling their money. So they make a lot of money. But then I'll give you an example of one client in particular. She used to do that. And then at some point, you remember the government came up with a ban on electricals, and they said, most of them coming in are substandard, etc. So what they used to do is hold these containers to inspect them one by one. So because of that, she had a very big problem with the government, and her containers of about 25 million shillings up to date are still stuck at the port. She's been unable to get the containers. And last month, when she finally went to KRA to try and clear those containers, the demurrage that had accrued, the storage costs that had accrued were even more than the cost of those goods in that container. So I remember the first time I approached this client and I told her about money market and wealth management. And I told her that then, it was before COVID, our rates were at between 10 and 11%. And she told me 11% for 1 year. Do you know how much I make from going to China and bringing my money back? And I told her, for sure, I will not dispute that a business will give you more money. But then now later, last month when we talked, that's when she told me, you are actually right about the return versus the risk, because now I've seen how easy it is to lose my 25 million because it has gone, it has gone. And I now have a newfound appreciation for other investment avenues, because had I not kept my money in wealth management, because eventually she agreed to keep her money in wealth, my part of her money, as she was waiting to see how the government will respond. Then COVID happened and she decided, you know what, as we are waiting for the market to recover, let me pack my money and wait for this COVID thing to clear. And then after that, I will now decide whether to go back into business. So now she's decided, you know what, I've decided, from the gains she has earned from her wealth management fund of 10% every year, she's realized, you know what, I could actually survive on this money, because she had a good base that she had made from business. So business is good, but other investments can also come in. If you have surpluses in your business, start consolidating them, because you'll not always be energetic. For example, if you're 40 and running a business that is doing very well, you will not always be energetic to run it when you're 60. So are you keeping money aside that will afford you the same level of comfort that you have right now from the savings that you'll have made then? Yeah. And then finally, we have people who believe, who have done a lot of Uber and amongst other businesses. So these are just an example. So my parting shot for this slide is to say this: there is no one investment that is more superior than the other. I think the message I would like to preach here is diversification. Yeah, diversify, have your eggs, have your money in a bank, what you need to transact, have money in M-Pesa for, paying your suppliers, have money in a circle for when you want to do a project and they will lend you 3 times without a lot of stringent requirements. Keep some money in treasury bills and government bonds. And that is where now Britam comes in, because now we are able to invest in these treasury bills and bonds more. We're able to get you better rates. Yeah. Have something in real estate for capital appreciation, for that rental income, that you can survive with, especially in your old age. Start a business by all means. If you have a skill that you can be able to monetize, by all means, start that business. But as you're looking to start your business, don't borrow, because it might choke your business. How about starting to save up slowly towards, setting up that business? Have that Uber business. I mean, it could give you, if you're a passive, if, for example, if you're employed and you're young and you want that passive income that will not stress you so much, and like a business, then perhaps Uber is what you can do. Although a lot of people say the returns are not as good as they were before, but for a lot of people, I saw it was a good means of earning a passive income that was not very demanding. And the entry requirements were not as high, because with this small car, I think with about maybe 600,000, you could be able to buy that car. Yeah. So that's my parting shot. Let's diversify, and there's something for everyone. So in this whole story, where does Britam come in? But before I get to that, I think what I would also want to say is some of the things you need to consider before you get into an investment. Number one is your financial goal. If you're looking at your kids' education, then obviously, if you're looking at long-term education, you can get into a long-term education plan, with an insurance company. If you're looking for school fees for May, because we'll be paying school fees again in May, perhaps keeping it in a SACCO is not the best idea, because you will have to borrow, but you can keep it in a money market fund to access it in May. If you're retiring, do you need to go into business when you're retiring? I mean, you're 60 and now going to start a business that you have not done all your life. And then at 60, that's when now you want to, buy a matatu, or, and you can imagine buying a matatu and running it at 60. Is it really the best thing that you can do? Is going into real estate to construct that house really the best option at retirement? The stress and the headache and, all those things. Perhaps buy a bond, and it will give you very nice passive income, and you won't be stressed about, the safety of your funds, because at retirement, you cannot afford to take a risk because for most people, that's the last large lump sum they ever receive. If you're looking to buy a car, you want to buy a car in the next 1 year. Should you keep the money in a bank account waiting to accumulate? Perhaps put it in money market account, and in that 1 year, if you have saved up maybe 50,000 shillings every month, that accumulates to 600,000, and there will be an additional interest of say 10,000 shillings. That 10,000 shillings can help you with the servicing that car. When you get it from Mombasa, you can service your car, you can pay for your insurance, etc. So it's actually a value add to you. If you're looking to buy a home, again, so your financial goal is what will determine the kind of investment that you will do. Then also your time frame, is it short term or long term? So if it is money that I know I may need, if I have a short term need that I may need to address, for example, an emergency fund. COVID made it very clear that a lot of us were living very precariously. We were living, always knowing that there will always be money, but now the reality is with us that anything could happen. And a lot of people were caught flat-footed without any savings, and they were laid off, etc. So if I'm looking to save up an emergency fund, for example, I need it to be in a very short-term liquid investment, but also that gives me value for my money. My money is not lying idle. If it is long-term investment, I want to earn steady income in my retirement. Perhaps I need to get into real estate, or I can buy bonds, etc. Then finally, the risk versus the reward. Again, I'll go to the example of I'm a retiree. Should I go into business, or should I go into more secure, safer investments? Because if I lose that money, do I have the ability? I could have the appetite for that investment, but do I have the ability? Will I be able to stomach that risk in case I lose my money, or I will lose it and lose my life along the way, alongside it? Yeah. So these are the three critical factors to look at: your goal, the time frame, and the risk versus the reward. And all those investments will tie in depending on, what your risk framework is. Okay. So now I'll rush through this. I think just crystallizing the need for an investment and what is good and what is bad. I wanted to take a bit more time there so that I can make it relatable. But now talking about the Britain Money Market Fund, I will, make it very, very fast. Now, what is a money market fund? Now, a money market fund, I would say, is like, what would I call it? It's what we call a collective investment scheme, or a unit trust. Money market funds fall under unit trust. And in short, we mean by unit trust is just a collective place or a pot where a lot of people put their money, they give it to someone to manage it for them and manage it professionally. So money market operates under what we call unit trusts. And in short, like I said, a unit trust is a collective investment scheme. So I get money from Lucy, from Carol Gazi, from Patricia, from, like that. Put it in a pot. The money is put in a pot in Britam. And what Britam does is consolidates that money and invests according to your risk appetite and risk profile. We have other unit trust funds. For example, we have an equity fund, which is ideal for people who have appetite for shares. And shares are good in the sense that we have seen a lot of billionaires or multi-millionaires who have made their money through shares. Why? From trading. But then also they are very, very risky. We also have seen a lot of people who have lost their money in the stock exchange. So for people who have an appetite for risk, especially younger people, in fact, if anyone who is below the age of 35 right now, I would encourage you to buy shares. A lot of the shares in this market are undervalued, extremely, extremely undervalued. And the reason they're undervalued is not because the companies are not performing well, but it's because of our general market economy. Also because we politic a lot. So you notice that a lot of foreign investors will exit the market when they notice there's a bit of, political, bickering and uncertainty. But I've always told people there's a reason why foreign investors leave their markets to come and invest in the local market. They make a lot of money. So if you're young and you have the ability, the appetite for risk, an equity fund is also something you can consider. We have another fund called the Balanced Fund. Balanced Fund is a blend between the shares and the fixed income where money market invests. So it invests 50-50 so that you take advantage of the opportunities in the shares market. But then also in the event the shares market perform badly, the fixed income portion is able to cushion you against the losses. So money market is a unit trust that invests mainly in the low risk investments. So like I said, depending on your risk profile, there are a number of unit trust funds that you can invest, but today primarily we are looking at the money market fund. So it's a pot where we take money from very many people and institutions. Currently the fund size is about 11 billion shillings, and all that money is invested in treasury bills, government treasury bills. It's invested in short-term treasury bonds, and it is invested in bank deposits. So I know a lot of you will ask, then why don't I just go to and buy the treasury bills on my own? Why don't I go and buy bonds on my own? Why don't I go and invest in bank deposits on my own? And the next slide will tackle this. So number one, the advantage of investing through a money market as opposed to doing it on your own is diversification. If you want to invest in bank deposits, most likely you will have one or two banks that you'll put your money. For us, in our case, we have a panel of about 10 banks, and these are banks that we have heavily scrutinized, and we just don't invest for a rate. We invest because we know the funds are safe. And also, in addition to that, if we look at, for example, treasury bills, if I were to invest in a treasury bill on my own, I'd probably buy one or two. But for us, every week we are in the market buying treasury bills. Every week we're in the market buying treasury bills. So what happens is that our huge pot, has a wide array of investments, and that is good for diversification because it reduces what we call investment risk. And then the other thing is convenience. The time and the effort that you require and the paperwork to open all those accounts, to go to CBK, to open a CDS account, to do all those things, you don't have to worry about all that. Britam does that behind the scenes. So all you do is come to Britam, fill in one form, or go to your mobile and open that account within 30 seconds, and you're able to access all those investments without having to go through the headache of doing it. So focus on your core business. If you're in business, do your business. If you're employed, focus on your give your employer, the best, your best energy, and then leave us the experts to handle your treasury bills and your bank deposits on behind the scenes. And then the one I love most is the economies of scale. The reason is because of this huge fund. As Virginia, I may have only 100,000 shillings that I want to fix in a treasury, in a treasury bill or in a treasury bill. But because I only have 100,000 shillings, if I go to the government or if I go to the bank, they will give me a very small rate. In fact, right now, if you have 100,000 shillings and you want to get a deposit rate, they'll probably give you 2-3%. But now when this money is combined in Britain, anytime we go to a bank, we go to the bank with 500 million shillings, 1 billion shillings. So we are even able to negotiate for much, much better rates. Then there's professional management. I cannot underscore that. We have professionals behind the scenes who understand the investments market. They understand the vagaries of the market. We monitor the trends of the market keenly. So you know that in terms of the knowledge of the investment market, you're getting the best of the best. Then there's liquidity. Now, by liquidity, I mean that you can be able to access your money anytime. Remember when I mentioned a government bond, some bonds are even 2, 3, 5, 10 years. Treasury bills are 3 months. If you want to fix money in a bank deposit, you have to fix for at least 3 months. But if you invest in money market, we invest in those same instruments, but we give you, the investor, the privilege of accessing your monies at any time. So you invest with us, get a rate of 9%, which is much, much better than the 3-month deposit or the 3-month T-bill. But in addition to that, if you come 2 weeks later because you have a need, you are able to access your money. So you don't have to fix the funds for a locked period. It can be for whatever duration. You could decide that I'm doing a savings challenge, but you have an emergency midstream. If you have an emergency midstream, you can just come and withdraw the funds, and we're able to give you the access to the funds at any point. And then, of course, like I said, most importantly, safety of the funds, regulatory protection. So in terms of the features and benefits of the money market fund, number one, like I mentioned, this is where we invest. On the left-hand side of the screen, you'll see how we have invested our funds. So 19% of the fund is in corporate bonds. So we have some companies like Safaricom, some companies like EABL, some companies like NCBA had a bond, Britam had a bond at some point which we repaid. So you have a lot of blue chip companies that borrow from the market as opposed from borrowing from a bank, and that is what we call a corporate bond. So 19% of that money is maintained within corporate bonds. I think that 19% currently is split between Safaricom corporate bond and the EABL corporate bond. Then we have fixed deposits, bank fixed deposits. 20% of that fund is in bank fixed deposits. Then we have call deposits. Call deposits are deposits still kept within a bank, but they can be recalled at any time. And the reason why we have that portion is, like I said, for liquidity. If today you want your money, we don't want to go and liquidate a whole investment to pay you back your 1 million. We can access it from the call deposit without breaking the other investments. And then finally, we have the government treasury bills and treasury bonds at 56%. And those are the ones that give us very, very good rates. So in terms of the benefits, like I said, this is a low risk fund that gives you capital preservation. Yeah. So, and it is comparable to keeping your money in either a bank deposit or a current account, because like I said, you can access the money anytime. So it's comparable to keeping your money in a bank deposit, in a saving account or a current account in a bank or treasury bills. But when you compare the rate that you're able to give compared to that what you will get in a bank, we are way better. Currently, like I said, we are giving returns of between 8 to 9%. If you look at the 3-month treasury bill, currently it's giving about 7%. If you look at bank deposits currently, they're ranging from between savings accounts are at 2 to 4%, deposits are at between 4 to maybe 6-7%. So we are giving you something better than a bank, and the risk profile is much, much lower. Yeah. The reason I say the risk profile is much, much lower is that if today a bank collapses, that's it. They go with your money. Today, if Britam collapses, your funds are held in custody and are in the various investments, and the monies are not sitting in our current accounts. Okay. Then I mentioned it gives capital protection. So your capital is fully preserved. Then thirdly, interest is earned and compounded on a daily basis. So what I mean is, for example, if the rate today, the rate fluctuates on a daily basis, depending on that's why I have given a range of between 8 to 9%. So the rate fluctuates on a daily basis, depending on, how much money we received that day, how much we invested that day, what the average return on the portfolio is. But for example, if the rate for today is say 8%, and I have invested 10,000 shillings effective today, I will earn, for example, an interest of 3 shillings, for example's sake. So tomorrow, my principal will be 10,003 shillings. So as we are calculating the interest for tomorrow, it will be paid on a principal of 10,003 shillings. Like that. So your principal grows on a daily basis. And that's what we call the power of compounding. And then, like I said, it's a very liquid fund. If you need your funds, you can be able to access them within a very short window of 2 to 3 days. If the money is going back to your bank account, it reflects back in your bank account within 2 to 3 days. And now we have introduced an app. Now with the app, you can actually be able to access your monies within 24 hours if you do the application withdrawal through the app. The minimum investment is 1,000 shillings. For the longest time, money market, had a minimum investment of 250,000. And then we saw with the betting culture, we realized, a lot of people have money, but they just don't know what to do with their money. There are a lot of people who have lost hundreds of thousands of shillings in betting, for example, or in pyramid schemes, for example. But if they had kept that money with us, perhaps they would still have that money with them. So that's the reason why we took it down to 1,000 shillings. We're also we are running a drive, we've been running a drive for students to encourage students to save. And for those of you who are parents here, we encourage you to open savings accounts for your children in money market. Don't open a young savers account in a bank that will not pay anything. Open for them a money market account. Show them how to invest. Start with that 1,000 shillings. At the end of the month, show them, here is your statement. In your statement, you have earned an additional 10 shillings. So that means your money is growing. Now, imagine if you start that with a child who is maybe in grade 1, 6 years old, and you keep doing that progressively, and you're showing them how to build up a fund. By the time they're 18, it's money that they can be able to do a lot with. We are encouraging our children to get into entrepreneurship early. The reason some of us didn't get into entrepreneurship early is because we did not have the capital. But if you're able to save up even 1,000 shillings for your child every month until they're 18, they will not only have the amount you'll have saved for them, but in the 18 years, their monies will have more than tripled. What you have saved will have more than tripled in amount. And we can work out these simulations with you, depending on the amounts that you're looking at. And then finally, like I said, the rate currently is between 8 to 9%. It fluctuates on a daily basis, but I can say that the normal range is between 8 to 9%. There are instances where we have done highs of even 10, 11% when the rates in the market are good. I think the worst we have done is probably about 7%, but those ones are very few and far between. So this is definitely a very, very good rate. So what are the quick wins for you? Where do we start? We have the information, we have the features of the fund. How is this fund relevant to you, and how can it apply to your life? Now, I'm happy to see that Lucy also had a slide on the 50, 30, 20 savings rule. It's something that I really, really like to encourage my clients to do. And like you can see, this is universal knowledge. This is not just Lucy who came up with that. With information to sort of encourage you to save, but it's actually a universal principle that encourages people to have at least 50% of your budget spent on essentials like food, etc., rent, school fees, etc. 30% can go to discretionary savings, your holidays, your chama contributions, your baby showers and bridal showers. For men, you are meeting your friends and entertainment, etc. So that 30% can be spent however you want. And then finally, we recommend that you should keep at least 20% of your monies in savings. Now, it may look as like a tall order, especially if you're not doing that, but slowly by slowly, I think just starting slowly and readjusting slowly by slowly, it makes a big difference. So I think the most important thing is to start somewhere. And with time, you realize, if you decide at the end of, if I receive my salary, I will close my eyes and take 5,000 shillings and put it in money market and forget about it. The beauty is, if at the middle of the month, you realize, I need that 5,000 shillings. I may have kept it aside, but then I've realized I really, really need it. You can access it. Go to your app, withdraw that money. And, of course, we don't encourage you to, because it's a saving, we don't encourage you to keep removing, but worst comes to worst, you will still have that. We'll still have that money. Now, the reverse is what happens. If you don't save, you end up squandering that money. And half the time, all of us will attest to the fact that you sit back at the 10th of every month and you try to think where that 10,000 shillings went and you can't quite account for it. So what I always recommend is, if you can't, start off a standing order at the end of the month so that when the money comes into your account, it is deducted automatically. So start when the money is there, but don't wait to receive the money to now, send it. Yeah. But if you're disciplined enough, then you can work, without a standing order. So this is a simulation that I like to use because it spans, incomes of different people. What I'm trying to say here is, assuming my net income is a certain amount in a month, and then I keep aside 20% of that amount, what will it translate to in year 1? What will it translate to in year 3, in year 5, in year 10, in year 20? Like I said, this is money market fund. So when I say year 3, I don't mean you have to keep your money for 3 years. But what I'm trying to say is you can match it to a goal that you have 3 years from now. Let's start with a person who is earning 25,000 shillings. Someone mentioned they have just started working. Assuming worst case, your salary is 25,000 shillings, assuming worst case, or even anybody someone who earns a net income of 25,000 shillings, it could probably be someone in business, even a boda guy who makes 2,000 shillings in a day. No, actually, a boda person who makes 1,000 shillings in a day will have a net income of 25,000 shillings every month. So if they commit every month to taking 5,000 shillings and putting it in their savings, I have worked this simulation assuming the money is invested in money market, earning a return of 9% per annum. So year 1, they'll have accumulated 60,000, but then have an additional interest of 2,553. Now, the reason the interest is not so much in year 1 is because the savings have been coming in installments. So like the installment that comes in November will only earn interest for 2 months. The one that comes in December will only earn interest for 1 month. So that's why the interest looks little. But that same 62,000 now in the second year will earn an interest of 6,000. So the more the money is there, the more it earns. So if I earn 25,000 shillings, I have just started working, or I'm a small business person. What will 62,000 do for me at the end of the year? Will I pay school fees for my children? Will I decide, I'm going on holiday with my friends. I want to travel and see the, travel to Dubai, for example. I mean, the 62,000 will take me to Dubai, or I could decide, I want to move out, for example. So instead of going to borrow to move out and to furnish your little house, there you go. You have 62,000 to fill in your bedsitter nicely. So then you decide, I'm 25. After 3 years, I want to go and do my master's. I could decide I'm not touching the money in year 1, but I want to keep the money until year 3 when I go to do my master's. So by year 3, I'll have accumulated about 202,000. That is inclusive of interest. 202,000 will very well comfortably pay for my maybe 3 semesters of my master's. And I have now just required to raise a little bit more. In year 5, when I'm 30, I decide now I'm doing a wedding. Yeah. So do I start calling a committee with nothing? I can go and tell the committee, you know what? And if your partner and you had started at the same time, you'll go and tell the committee, we have over 700,000. All we need is a small boost off, or even with that 700,000, you can do a very nice wedding. And, so you can see how this aligns to your goals. Kidogo, kidogo, haba na haba, but it goes a long way. Remember, for that first example, I have assumed this person does not increase their savings. They do not have a salary increment or a business increment, revenue increment within the 5 years. They have just decided to maintain the 5,000. But if they keep topping up and adding the amount, then of course, the enemy is even bigger. The savings are even bigger. So the same scenario for someone who has 50,000. So I'd like you, just to look and see through that slide where your income level lies, if you committed to saving 20% of your income and how it will build up. And now imagine what that amount in year 1 or in year 3 or in year 5, what it could do for your life and how it can help you achieve those goals that you have. I will share these slides with you so you can, be able to conceptualize that. If you're in business, for example, if you're, for example, in real estate and you receive rental income, for example, and your rental income is, say, maybe about 300,000 every month, take aside 60,000 and put it in this fund. Now, for people in real estate, I encourage them to put money in such a fund. Normally, in financial terms, it's called a sinking fund. Now, the reason we encourage that is, number one, most people receive deposits and they eat them. So one of the biggest issues we have, even when you go to the rent tribunals, it's landlords who have not returned deposits because the tenant tells you they want to move out. There are other things, you have another project, etc., etc. You ate the deposit, so it becomes a problem. But you can take 60,000 out of the 300,000 and keep it in a fund. If a tenant is moving out, you look at the house, evaluate, etc., what needs to be done, and the balance is paid amicably. Number two, it is always important to insure your buildings. Like I said, insurance is very important because a lot of people have lost assets that they have worked so hard to build because of a simple risk like fire. Fire occurs, these are rental properties, a fire occurs and you have not insured the building, and that's it. Your whole lifetime worth of investment just goes down, at one go. And then number three, most importantly, as a landlord, these days, because of competition, you want to ensure that your rent is at par with the market. We know landlords who built their houses a long time ago, but because they do not maintain them well, while your neighbor comes and builds a new apartment next to you, they're able to get rent of 50,000. Yours is only able to attract 35,000. Why? Because of the state that your property is in. So, and then also your tenants move out from your old building to go to your neighbor's new building. So what we always advise is, from this fund, you can be using it to do your renovations, etc. Just keep sprucing up your building, repainting it, making it look nice, fix the gutters, so that even as the market rates are rising, your rent also rises with the market rates. And the advantages for you is that you will have built that we will have invested much less than what your neighbor invested to do their building, because it's much newer. You have invested much less, so your return is even better because you're getting the same return for a lesser investment. And then, of course, these days, especially for people who have property in Nairobi, we see city council have said, you have to keep repainting your building every, so often, etc. So if you don't have that money kept somewhere, it's going to be a headache. And what you realize is, for example, if you have, in year one, you have accumulated 750,000. The interest from that comes to about 60,000. That 60,000 will pay for your insurance premium. So in short, you will fund your insurance premium without actually using your money, but using the interest that you'll have earned from that amount. So even for landlords, it is still relevant. Are we telling you not to do your business? No, do it, but look for ways of keeping money aside. So there are very many ways we can use this fund. For high net worth individuals, someone who has a lump sum, let me not call it high net worth individuals, let me just say for someone who has a lump sum. The other example was someone who will build up slowly on a monthly basis. This advantage is for, this example is for someone who has a lump sum. Yeah, so for example, I have accumulated my 10 million shillings so for example, I have my 10 million shillings, I've accumulated somewhere. In 3 months, if you invest this money, in 3 months, you can have earned interest of about 201,000. In 6 months, you can have earned 403. In 1 year, you can have earned 810. So remember, this money, the 10 million, can still go back to your business if you want it. But in addition to that, is your money lying idle? No, it is earning you something. So in 1 year, if you earn 810,000, you'll pay insurance for your properties, you'll pay insurance for your cars, you pay your medical insurance, you'll do all those things. And this is just interest. Your principal remains intact and accessible for whatever you might need to do. Retirees, if you have parents who have retired, I keep saying this, I get saddened by how people struggle after retirement. I think I'm a big proponent of retire peacefully, enjoy and travel the world and raise your grandchildren. Enjoy time with your grandchildren. So if you have, for example, 5 million that you have gotten from retirement, remember, there's part of your retirement goes to what we call an annuity. which is tied for your lifetime, and then you get a lump sum. 1/3 comes as a lump sum. So assuming your 1/3 is 5 million shillings, you can earn a monthly interest of 33,750 comfortably every month, and your annuity is still intact. Your real estate income is still intact, and your 5 million lump sum is still intact. Today, if you have an emergency and you need a lump sum of 5 million, your funds will still be intact. So we can have these conversations on a one-on-one basis and work out simulations based on your specific need. I'm wrapping up now. How do we start investing? We have a very easy way to invest. We can all start now actually with that 1,000 shillings, yeah, to see, just to see that it actually works. We have a USSD platform for investing. So you can actually invest from the comfort of your home. You just need to dial *778#, select money market fund. There are two funds in there. There's one Imarika, which is insurance, and then there's money market fund. You enter your ID number, accept the terms and conditions. You will receive what we call a one-time password sent to you via SMS. Once you receive that one-time password, redial again, put in your one-time password, then select how you are introduced to Britam. In this case, you enter the telephone number that is mapped to your financial advisor. In this case, Lucy is your financial advisor, so she will furnish you with the appropriate telephone number. Now, the reason why it is good to map it to a financial advisor is that she will help you track your investment and ensure that you are, keeping up to your promise of achieving that goal. So direct you to M-Pesa, you enter the amount you want to invest, and then after that, it is just very self-explanatory, and it deducts the funds from M-Pesa. So it's very, very easy to invest. No forms are required, all those things. But if you're looking to invest a big amount, then we recommend that you do application forms, because you'll have to do a transfer from a bank. If you're looking for a big amount that is beyond M-Pesa limits, then we have application forms that you can fill in, and even that will be able to take you through. It's very simple. For an individual, all you need is a copy of your ID, a copy of your PIN, a copy of your statement or ATM, and we are able to set you up very, very quickly. The same for companies. If you work in a company, if you are in a church, if you are in a circle, encourage the people within your circles to invest, even if it's a church. I know, for example, last year, I saw my church lay off some of the people who had been working in the church, and it was very, very sad, because when they're laid off, they come to us as members to help them. And what I've done is taken it up upon myself to encourage my church to also keep the money, in money market. Whatever sadaka they receive, keep it. If it is your relatives, encourage them to save. If it is your company, we realize that you can actually be laid off, or you can be told to take a pay cut. So if you encourage even your finance manager to keep some money in money market for emergencies, then we would not have such instances where people are not being paid. So I always say engage your circles, and you're only as strong as your weakest link. If you do not encourage people within you to invest, then somehow indirectly it also affects you. Then your investments are very accessible. We have digital platforms where you can monitor how your investment is growing. For corporates, we have a corporate portal. For individuals, we have a customer portal on our website, which you can log into. We give you credentials, you can log in to monitor your investment. We also have the app. On the app, once you have invested, we will help you register on the app. And on the app, you can be able to monitor how your investment is growing. You can be able to top up from the app. You can be able to generate a statement from the app, etc., etc. And then, of course, the USSD platform as well. So I think I'll leave it as that. And I can take questions from here. I hope I have been able to address all the questions. If not, please feel free to shoot them, and we'll take them from here. Thank you. Thanks, Lucy. Over to you.